Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
All right. Hey guys, welcome back to our show. I'm your host, John Harcar, and I'm here today with Dyami Myers-Taylor. And what we're going to talk about is, not besides his journey in real estate and business, we're going to talk about how to really make sure you know what you're investing in, right? How to really do due diligence, how to really know. Remember, guys, at Investor Fuel, we help real estate investors, service providers, really all real estate entrepreneurs 2 to 5x their business. We provide the tools and resources to grow, that business you want to grow, which helps live the life that you wanted to live. Dyami, welcome to our show.
Thank you, John. Thank you for having me, and look forward to having the conversation.
Yeah, me too. That's awesome. I didn't know that you were once part of Investor Fuel, and that's cool. And I want to talk more.
You guys do a great job. Just to give a little plug, I was part of Investor Fuel, and it's a great group of like-minded individuals that are growing their business in the real estate fix and flips. I was part of the apartment. I don't know if it's a division, but apartment groups. Mm-hmm. And so, yeah, they do a great job.
Awesome, man. Well, thanks for the plug. But, I'm looking forward to talking about, what you mean as far as knowing what to invest in. And before we talk about that, right, tell our audience a little bit about you so we can get to know you, kind of about your background, your journey in real estate, and what brought you to today.
Great. Yeah, so I always, we didn't grow up with like the silver spoon in our mouth type of thing. And there's times we were homeless, right? It was not the worst, but also not the best, right? But I always wanted to have passive income. I always wanted to have financial freedom, and I didn't really know how to do that. And so when I got out of school, high school, I went to college, and I was doing sales jobs. And then after college, I got into insurance because I heard about this thing called passive income. Mm-hmm. And I thought, okay, well, in insurance, that's how they pitch people. You build up a book and you have passive income. And it wasn't until later that I actually realized, I became very successful. I was the number 2 producer out of about 500 plus reps. Wow. And was making good money, 6-figure plus money back in 2009, right? 2008, 2009. Mm. And so I had this problem because the market had just corrected. Everything was in a free fall, and I had cash and I had credit, but I didn't know how to invest. And I put my money with a buddy who the company was growing quickly, and I knew nothing about investing in private companies. I didn't know how to evaluate it. Right. It was basically just my friend, and I was like, okay,
Justin,
sure.
Right? Yeah, okay.
Here's,
let's make money.
And within 6 months, I lost 92% of my investment, and that was a third of my net worth at the time, about 35%. And it woke me up. I was like, oh, I think I need to learn.
Yeah, that would knock something into
I can't take
you.
too many of these hits.
Right.
And so it made me start to look, and it made me start to really learn. And this whole investment philosophy that Wall Street has laid out for people.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
I started to question because, I was seeing people not necessarily at the time, like Nancy Pelosi, who's got, $100 million net worth on $100,000, $200,000 salary. But I saw people who were doing better than the market. And the market was doing terrible at the time, 2008, 2009, 2012. And so I started doing my research. I started looking at different asset classes. I started looking like, what's something that I can know? And what's something that I could duplicate the efforts? Like 75% of all, 80% of all of the stock market trades are all flash trades, meaning you got 10,000 trades in 1 second.
Right.
And it's all done by computers, and it's a very different world. I can't compete against that. I can't win against that. And so that kind of led me to real estate, and I started learning about multifamily apartments, partly for that passive income. And then I went to go work for bigger companies. So I went to work for companies that were doing that. I had tried to do it a little bit on my own, but didn't have the knowledge. And so after about 9 months, I was like, okay, I need to go get a job. But I was putting deals together for private equity real estate funds, put together 260 portfolio of single family homes as institutions were starting to move into the now they call it BTR, build to rent. But before it was like the REO to rental space. And so institutions buying houses. And I went to work for a $250 million fund at the time, Bainbridge, and ended up being basically an acquisition analyst for them, helping source pref equity for, large, multi-$100 million deals and stuff like that. And started learning the investment game from real professionals. And at the time, a lot of the people who had been in the business for 10, 20 years had just taken some licks in their portfolio, because 2008, 2009, 2010.
Oh, yeah.
And so it really was a wake-up call for me to just say, okay, mental note, when this happens again in 10 years, because there's a reason it's called a cycle, I'm going to remember this. And so I worked for different private equity real estate funds, real estate operators from 2011 till about the end of 2018. Did $500 million or so in multifamily acquisitions, worked on different projects, doing the acquisitions component to that, but as a small piece in a bigger company, and with no equity and no, I was just a W-2 employee.
Sure.
And then so 2018, I decided, I have a pretty good handle on this, and it's time for me to make myself wealthy, right? At the time I was wanting more freedom, and wanting to put some of those skills to use. And so, I bought my first project. I bought it for 1.85. I sold it for 2.85 18 months later.
Wow.
And we had put in basically 230, 240, something like that in improvements. And so that was my first kind of kicked off and started my own business. And since then, I've done about 40 million or so in transactions and buying. We've done a handful of fix and flips, but we're shifting now to just only focus on apartments.
Mm-hmm.
and we have about a 75 unit apartment portfolio in Texas and Florida, and we basically do the buy, fix, sell, or buy, fix, refinance.
The burr kind of thing
Yeah,
without
yeah,
the last
exactly.
burr, the rent.
That's right.
Yeah.
And so we like to focus on things that we can control, but also we're taking a macro view from the investment space to really understand like um, where we're at in the cycle, how are things playing out from an interest rate perspective, because that has a huge impact on the valuations for commercial real estate and every other asset class.
Mm-hmm.
So yeah, we spend a lot of money on research. We're kind of in the early phases right now. It's just me with the business. I'm shifting business models from fix and flips to just apartments.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
And so we just have 2 flips that we're doing, but other than that, we're focusing on bigger stuff. And
Very, very cool.
yeah,
Let's go back a little bit.
sure.
So when you first started getting into this and learning this stuff, why was it important for you to go work for someone to learn it versus just use whatever resources out there we can find to learn it?
I ran out of money. Yeah, yeah, basically. So I went to do it myself. I had lost that money with my friend in the friend's company, but I
Right.
still had, about a year and a half of income. And after 9 months, I was like, okay, I was learning. So I was learning while I'm trying. So my account balance is going down every single month,
Mm-hmm.
and I'm increasing my knowledge every single
Every
month.
month, right?
But the time after about 9 months, I made my first revenue from actually wholesaling the some of the those that 260 unit property portfolio, and they cut me out of a $250,000 commission, and I got paid $26,000.
Oh,
And so I had maybe 6 months left, and my fiance at the time was like, "You need to get a job," and I didn't. I wanted to make my future wife happy at the time, and
sure,
so
of course.
so I ended up. I had tried to buy fix and flips. I had tried to do it, but it was really I ran out of money in
Yeah,
terms of like, and I didn't want to I wanted to make sure that I can do everything I needed to do with my with everything, all my responsibilities and stuff.
sure.
So yeah, I went to learn. It was a good experience. I went to different companies, and yeah, I think it was a great. In retrospect, it was great because it provided a different framework. So there's a lot of people that I've met that have entered the syndication base world. Syndication being pooling people's money together,
Mhm.
which in the investment world, that's often to fund, or it might be an individual offering, a private individual syndication,
So, yeah,
just like one property and one deal versus a fund. You have more than one. You might have 5 or 10 properties in that one fund.
right.
But yeah, I learned a lot of very sophisticated stuff, and then at the same time, I was still learning what was out there from hey, how to sell a house.
Mm-hmm.
So it was this convergence of Main Street and Wall Street, and seeing what was like, some of the stuff that didn't really work at Main Street and some of the stuff that worked better. I was able to kind of mend the two, because Wall Street is very rigid in terms of a box.
Right,
Oh, you can only invest in a city with more than 1 million people.
right.
Whereas like if you're a guy in a 250,000 person town, 300,000 person town, you can still find some good opportunities,
Oh, for
right? So
sure.
it's so kind of I would say integrating those two philosophies, and then that gave me a decent framework for going out and what we do now.
Got it. Okay. So what are the pros and cons of apartments versus fix and flipping?
So fix and flips is great because it generates active income, and you can generate a high active income. The last 5 years we did about generated about 3 million in profit,
Mhm.
and then we used a portion of those profits to go buy apartments. And so with fix and flips you can generate high income and high returns on your capital, especially if you are getting high leverage. Uh, Leverage being a loan.
Mhm.
And there's a lot of hard money lenders that will provide fix and flip financing, that 90+% loan to cost.
Yep.
And so you can have good returns on capital, but um, that will change uh, unless you are uh, leveraging your money and raising in money from other people, right?
Right.
Because you'll need to build a team, and then once you have 5-person team, you've got all this overhead, and so it really is a business. It's not just like, hey, let me just flip a house. You really have to run it like a business.
Sure. Yeah.
Um, and and so on the one end, you got high income, high tax. You basically have a job.
Right.
Until you could grow that business to say a million in net in profit for fix and flips, you basically have a job.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
With apartments, it's a much longer cycle in terms of, it could be 3 years, it could be 5 years, it could be 7 years, and you have a lot less tax burden because you basically have no taxes,
Mhm.
and but you have a lot less income on the same dollar. So if you got 100 grand, you could do so many fix and flips a year. You can generate so much money. That'll be a lot more than if you have 100 grand and you go buy a rental.
Buy one apartment
But
building. Yeah.
yeah, and I like apartments because you know I had known this, but it really was apparent when I had a project where um, I spent the same amount of time. It was a project I bought for um, something basically like 425. I
Mhm.
put in 126,000. I sold it for 875. It was a home run, and it took a year and a half. I changed a house into two houses, and it was a lot of regulatory problems and all that stuff. And then there was another property that I had that was an apartment, and all we did was update the kitchen, the bathroom, like the flooring, new
Mhm.
paint, easy cosmetic finish work
Yep.
that doesn't require waiting six
Permits
months for
or
a city
anything like that.
permit.
Yeah.
Yeah, especially San Diego County, where the ADU laws were available at the state level, and so in theory you should be able to do an ADU. And at the city level, they were blocking it and not giving permits, and then so that delays your ability to be able to fix the property. So I basically made the same money. Actually, I made more money, twice as much money on the apartment doing less work than I did on this one project that was a house. And yes, it was a good project, right?
Yeah. Yeah.
But that opened my eyes. And then as I grew my business, after about basically about a year and a half, 2 years ago, I just looked at 80% of my time was on the fix and flips. It was generating 20%
20% of your income.
of my
Yeah.
profit.
Yeah.
The apartments was the exact opposite. It was 20% of my time, and it was generating 80% of my profit. And so that's when I decided, okay, you know what? I'm just going to effectively shut the business down for fix and flips, and I'm just going to go all in on apartments. And I didn't necessarily do that cold turkey. It's kind of been a little bit of a transition, winding down the fix and flips down, and then ramping up the apartments. And so we have a couple flips left, but we're moving away from that and just focusing on bigger projects.
Very cool. What type of struggles, or are there any type of like things that are a little bit more difficult when you got into the apartments versus the fix and flips?
Um,
Any challenges?
well, so if you take any market, San Diego has about 35,000 transactions a year. And roughly in fix and flips, you have about 1 to 3% of the market is going to be distressed.
Mm-hmm.
So that ends up being, say 350 to 1,000 houses that potentially are distressed. And then so whoever the competition is, not all of those distressed deals are going to be profitable.
Right.
Right. So let's say maybe half of them are profitable, and then you might have a couple in San Diego. You had a couple that was, well, my point is you're looking at deals every day. The volume of transactions is much higher in terms of the number of sales, the number of opportunities that you look at. In apartments, in 2022, there was like something like 104 or 107 apartments over 100 units in size that sold in the entire United States.
Wow.
So you have 50 states and 100 apartments sold. And some of those states you don't want to be in, like New York, Chicago, some of those cities, Portland, Seattle, San Francisco, even LA.
Yeah.
Those are different plays and have different regulatory risks. And so a lot of investors stay away from that. And so if you take those out, you just have much fewer transactions when it comes to apartments.
Yeah,
and some
that's
of that
true.
volume is starting to come back in the last 2 years. But my point is, you'll have a much higher number of volume of houses to look at versus apartments. But apartments will take longer,
Right.
To effectively underwrite. Like you'll do a back of the napkin for both properties, but the next step, which is a more deeper level of analysis, is much quicker with a house than it is with an apartment. And when I first started, it would take me a week, right, to like really go through all the stuff that you start to do to model it out correctly. When I say model it out, I'm talking about a financial model,
Right.
where you have an Excel sheet or a tool that's a software program, and you're putting in all the inputs, and garbage in, garbage out. So if you put in garbage,
you're gonna get out garbage. Yeah.
Yeah. So it's really, to do it correctly, you need to make sure that you're dotting your T's, or dotting your I's, crossing your T's, making sure that all your inputs are correct, because a $10 million building, that's a $10 million mistake.
Yeah, it's a
So,
big mistake.
yeah. And, so it's much more difficult. So, so it just takes a little bit longer.
Okay. Well, let's talk a little bit about what our kind of topic was, how to make sure you know what you're investing in. Tell us a little bit about that. Talk to us about that for the next couple minutes.
Yeah. So what was important for me is to really invest in something that I can know. And where did I get that? Buffett, right? He talks about your circle of competence, your moat. And I didn't want to go learn, day trading. I didn't want to, but I also knew that and there's a lot of different information out there for different demographics. So like what ultra high net worth individuals invest in, somebody worth 30 million or more, right, in investable assets, and what Dave Ramsey is promoting are completely different worlds.
Right.
And if you actually just look at like what the data says, as you're moving up in your demographic, you have to get different data, and at some point, you'll look at any person that's built substantial wealth. didn't do it by diversifying across everything. That now, after they built their wealth, then as a store value, then they diversified. But in terms of building the wealth, they did concentrate. And Buffett talks about this. He's like, if you can basically buy the best 2, 3, 4 businesses in town, what do you care about all the other ones? Like, and so what I thought about was, okay, well, what can I learn? What's knowable, and what do I want to know? And so that led me to real estate. And I think also, I'm not doing corporate derivatives. This is ones and twos, right? This is very like, okay, you got to divide and subtract, but this is fourth grade math.
Right.
Occasionally maybe you have like entry level algebra, type of thing. Like, okay, what should the rent be? But really, it's a very simple. It's simple, but it's not easy, and it's simple to understand because there's legal, there's financial, and there's physical due diligence on any property.
Right.
And so when you have those three components, you can break down, for example, your physical components down to the useful life remaining of every single component of the structure. So you have a roof. Any property is basically 4 walls. It's a box, basically.
Sure.
You've got your roof, you got your structure, your foundation, and then your mechanicals, which is plumbing, electric, HVAC, that kind of stuff. And those are all your big ticket items. Right. And so if you make sure that you're good with those items, that's a huge part of your physical due diligence. Your financial due diligence, when you're looking at operating statements for apartments, my best advice would be to go look at 100 of them, right? So that you get a good sense, because different brokers, some are better than others. Right. Some are more truthful than others. And if you're going to do your first deal, you need to have a bigger data set so that you can know what you'll likely have. And also you can, there's benchmarks for multifamily commercial real estate. CoStar has a lot of them. CoStar is a software provider. And so my point is, it's not unknowable. Like, you can call an attorney to handle your legal risk and talk with title, and have an attorney read the survey, pull a survey, read the title documents, see what kind of title insurance that you're getting, and talk to somebody about it. And so it's not that it's not terribly complicated. It's not necessarily simple. It's simple, but it's not necessarily easy. There's a lot of things you got to do to put together. But it's something that you can learn. It's something that you can know. And I'm happy to give my due diligence checklist for multifamily real estate for people that are listening. If you want it, reach out to John. I'm not quite sure how to.
Well, I was gonna say, we can
provide it to him.
Yeah, we'll put all the stuff. If you haven't sent me that link, send it to me. We'll put it in the show notes. Okay, cool. We're getting close to running out of time here, but I want to say, hey man, thank you for coming on and sharing all this. It's really, really good info. We'll put all your info in the show notes, your phone number, your emails, your socials, whatever you sent to us. And guys, reach out, man. If you have any questions, you have any interest in, maybe getting into apartments, or, some of the stuff he said resonated with you, reach out and take advantage of his knowledge. And, I hope you guys enjoyed the show as much as I did. Thank you again, Dyami. And guys, we'll see you on the next one.
Great.
Cheers,
thanks, John.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.